welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show, the show where we bring you where the action is in the broader markets. I realize I've been saying this every week, but another exciting week in the markets, several developments that you will want to be aware of, more rotation taking place, and we'll talk about why and ways that you can capitalize on that. So let's go ahead and start by taking a look at some of these news items that drove price action last week. The US government, we did have a shutdown mid-week at the end of Wednesday, and in turn, we did not see employment data for the month of September released today. However, the markets really took that in stride. There is a general sense that oftentimes with these shutdowns that you will see a resumption of government policies and certainly activity coming along soon. Now, also this week, we did get business employment data on Wednesday, and that is ADP, and that showed softness in the employment numbers. So that is what investors are going with at this particular time. We saw a weakening there. Also, Washington did demand that Taiwan move their chip production to the US. And this is all about a leaked military report. There are reports that China may invade Taiwan. So in response, the US wants to see more chip production in the US and not as much reliance on Taiwanese semiconductor manufacturers. In response, we did see a very big move in those semiconductor companies that have production facilities in the US. They're not all US-based companies, and a number of them were on my MEM Edge report. So you subscribers out there are certainly going to be well aware of the bounce that we did see in a number of those stocks. Also relating to policy, we did see a big move into healthcare last week, all about Pfizer's deal with Trump. As part of that deal, Pfizer is going to reduce the cost of prescriptions. They are also going to greatly increase their research by as much as 70 billion over the next few years. And that in turn pushed biotech stocks up along with pharmaceutical companies as well. Now, next week, it's going to be pretty light as it relates to the economic calendar. We are going to get the FOMC notes from the Federal Reserve's most recent meeting, and then later in the week, consumer confidence. But let's go ahead and take a look at these markets and see where did we close for the week. And here we are, a daily price chart of the S&P 500. Of note is that we did have 6 successive rally days, quite bullish there. And then we also closed at a new high. We are above that 10-day simple moving average with a positive RSI and a positive MACD. And a lot of the charts that I pay very close attention to signal that we could see further upside in these markets because those momentum indicators are not quite in overbought conditions. So from here, let's go ahead and take a look beneath the surface. I talked about sector rotation, areas on the move last week, and you will want to be aware of that. These are the 11 sectors in the S&P 500, and it is a 2-month daily price chart view sorted by relative strength. So let's take a look. XLV, that is that healthcare sector. Big move in response to that Pfizer deal. The group was up over 7%. Very bullish behavior here because we have that nice MACD crossover, black line up through the red, high volume characteristics, and a now positive RSI. Certainly a boost that the healthcare area needed, but I will cite that there is still uncertainty overall around the group, primarily because of policy shifts in Washington with the new head of the healthcare department. But net, the chart is giving us a green light. We can also take a look at utilities. They were up this week, XLU, all about that advance in the electric utility stocks. We're going to take a look at a couple of those names. But of note is that XLU is one of the top year-to-date performers given its advance, certainly all about the need within AI-related data centers. Moving through, taking a look, technology XLK had a move to a new high as well. Now, semiconductors certainly were a part of that move higher, but I am going to share with you another area that technology really got a boost from, and we'll take a look at a couple of those names as well. From here, you do, of course, always want to be aware of those relatively weaker areas, and Staples remains in a downtrend below these downward trending moving averages with a negative RSI and a negative MACD. We can also take a look at the volatility that has been taking shape in consumer discretionary XLY. You can see that we closed just below that 21-day simple moving average. However, we do have a positive RSI and a positive MACD. There certainly are bright spots within this sector. I will share a couple of names with you there. And then also taking a look at financials. They did waffle a bit, close the week flat, but there are bright spots among this area as well. So let's go ahead and drill down beyond these broader sectors, because you really want to have a good sense of the strength beyond the sectors into that industry group subcategory. And these are ETFs that I use that are very powerful as far as keeping you on top of market action. And again, a 2-month daily price chart view and sorted by that relative strength. And let's take a look. Gold stocks still up here in the forefront. Very strong demand for these stocks. A couple of factors. Certainly the declining interest rate environment is one of them. It's also been cited with the government closure that has moved to safety, but net, the demand for GLD is there with a nice uptrend. From here, I did talk about semiconductors, and the group was up over 4.5%. Here's that gap up on that news relative to the move of potentially more of the production into U.S. semiconductor companies. So you can see we had that nice base breakout and a continuation rally into the end of the week. Now we are in an overbought position with that RSI, so you will want to be selective, but the uptrend is still very much in place. From here, biotechs, I talked about Pfizer's deal with Trump, and you can see the sharp response in biotechs. From here, I'm going to pull up a weekly chart and share with you that we, first of all, did have a 10% gain in the group, but more importantly, I did want to share with you the weekly base breakout, because when you're looking at these base breakouts, when a particular group or a stock breaks out of a lengthy base, historically, the advance out of that base is going to be a longer. So here we are coming out of this move from June in 2024, and we have a nice positive RSI, MACD just entering into positive territory. Also compelling is this very high volume. So if you are inclined, again, I will be sharing with you a couple of names, but it is an area that is picking up as it relates to activity. Let's go ahead and take a look at some of these other sub-industry groupings. Solar also on the move higher last week. This is Invesco's Solar ETF, TAN is the ticker symbol. There's a gap up into that base breakout. And I did talk about technology getting a boost outside of semiconductors, and it was alternative energy. So we're going to take a look at a couple of names in that space as well, all about policy procedures that are supporting a move back into this group. And the company I'm going to be sharing with you did close a pretty big deal over in Europe. And let's go ahead and take a look at these small cap stocks. This is the Russell 2000 index, and it was the top performing of those major indexes. Certainly today was a good day for this group. A lot of this centered around biotechs and other smaller names on the move higher. So we are seeing a nice uptrend in small cap stocks. In fact, I will have a quiz in our next segment of 3 small cap growth stocks, and I'm going to ask your opinion if which one you believe will be up by the end of next week. But as we move through these industry groups, let's go ahead and take a look. Software IGV was an underperformer this week. The group did end the week flat relative to the broader markets, up about 1.5%. XRT is the S&P 500 retail ETF, and this group actually ended up about 1% as well. But let's go ahead to these underperforming areas. KRE, these banking stocks are continuing to struggle, and certainly we have a mixed outlook relative to interest rates and other factors. The economy, there are those that believe that this week's weak employment data could be pointing to a weaker economy, and certainly bank stocks are going to be negatively impacted by that outlook. And also, we want to take a quick look at the yield on that 10-year Treasury, and you can see that we did pull back this week. That is certainly good news for areas such as technology and other places where interest rates that are lower are going to benefit them. I did want to also mention last week, we took a look at those quantum stocks, and they were really big winners this week. This is Rigetti, one of the names that I did mention last week. Also, I talked about it in an article for Stockcharts.com. So this is Rigetti Computing, and it is one of the leading quantum-related stocks. And I wanted to highlight, well, last week I talked about that base breakout into this week's nice pullback to that 10-day simple moving average. And then we did see a sharp advance later in the week with these quantum related stocks. We are back again in an overbought position. But from here, for those of you that have a riskier appetite, I am going to share with you a view of an ETF that produces 2 times the performance of RGTI, and the ticker is RGTX. And what I've done here is actually there are 2 ETFs. One is RGTX Defiance Daily Target 2 times long, and then RGTU another 2 times. Basically, they are both performing very well. But what I wanted to highlight is that one of these ETFs does have higher volume. So when you're in, and again, if you have the appetite for it and you can stomach these, certainly the highs are always fun, but you are going to see significant declines when the stock pulls back as well. You generally are going to be well served to be in the ETF that has more volume, and that is RGTX of those 2. So from here, let's go ahead and take a look at those small cap companies I mentioned to you. And I'm going to share with you a marked up chart of these 3 stocks, and then also request that you put the name that you believe by the end of next week will move higher. First up here is Progress Software, PRGS. And of note here is that the stock is in the throes of potentially reversing its downtrend. The stock closed back above that 50-day simple moving average. We have a positive RSI, and we can also see that MACD just getting into positive territory. From here, I'm going to share some fundamental data with you. First up is that Progress Software is trading at 8 times. That is the multiple relative to the broader S&P, which is averaging at about 17 times. And then also of note is that the company recently reported their earnings at the end of August, and they came out with a 19% year-over-year increase in earnings. And also when looking at the earnings estimates for 25 and 26, they are increasing after that report of earnings at the end of August. And of note, the market cap for this stock is 1.9 billion. In fact, each of the names that we're going to be reviewing are in that 2 billion market cap range. Next up here is NetScout Systems, NTCT, and the company is also software related, and however, it is related to networking solutions. A couple of factors here. We can see that we had that base breakout last week, pretty good volume. We have a positive RSI and a positive MACD. Looking at some of these fundamentals, you can see that the multiple, the PE, is 12 times for those that follow that closely. And then we did see earnings reported at the beginning of August. They came out with 21% year-over-year earnings, and that's what helped propel this downtrend reversal that took place. And looking at earnings going forward for 2026 and 2027, we are looking at single-digit 5 and 4%. The third candidate here is VECO Instruments. This is a semiconductor stock. Again, 2 billion, quite small, but it is highly relevant in the AI space, capturing investors' attention back here with this nice downtrend reversal that has taken place. Despite this sharp run-up, the stock is still at 21 times on that multiple. It did have a very sharp advance last week because of merger activity that is expected to keep them at the forefront of relevancy within AI. Also, we did come out with earnings in the beginning of August, and they were negative year over year. However, they were above estimates. And going forward, looking at 2025, the remainder of this year into 2026, they're on the lookout for 26% earnings growth and 14% earnings growth. So we have three names for you to mull over. And again, would love to see your thoughts on that name that you feel will advance the most over the next 5 trading days. So let's go ahead from here. And I do want to share with you a view of the ARRY funds. They are faring really quite well. And the primary purpose here is the fact that at this juncture in the markets, we are seeing a lot of movement into these forward-looking stocks, whether it is quantum, whether it is robotics, AI-related, crypto, and that is an area where these ARRY funds are very heavily weighted. We can take a quick look here at a candle glance view of these ARRY funds, and you'll see the sharp advance that most of these funds did experience last week. Genomics, this is going to be all about that move into biotechs, also close to experiencing a lengthy base breakout in that ETF. So of note, highlighting the fact that we are seeing quite a bit of vibrancy. So we do want to keep an eye on these funds, tag them somewhere, because oftentimes the deterioration, if we do get a downtrend shaping up, it is indicative of a risk-off appetite among investors and a potential shift back to other areas. And I did mention that we would take a look at some of these alternative energy names. And let's take a look at certainly one of the biggest movers last week, and that was Plug Power, PLUG. Now, I will share with you that despite this sharp advance, we are still only at $3.80. So any stock that is below that $5 is generally going to be a lot more volatile. You'll want to take that into account. But Plug Power is among those major alternative energy stocks that had a big move. This was all about an analyst upgrade from their price target of $3 to $7, over double in anticipation. Plug Power just signed a deal with an alternative energy company in Portugal. And then also overall, we are just seeing nice movement into stocks in that industry group. A lot of that, again, having to do with policy setups that are benefiting these stocks. Let's take a look at BLDP, Ballard Power, and you can see this is another stock, sharp advance, because again, it is a $3 stock now sitting at 3.5, all about a price target upgrade to PLG. And then last up, ARRY. There certainly are other names, but this is Array Technologies. You can see we're forming the right side of a base. We did just get that MACD crossover, but again, certainly of note is the move into this area. I talked about cryptocurrency stocks faring well. We can take a look at a couple of these bigger names that are involved in that space. Coinbase exhibiting a downtrend reversal, forming the right side of a base. And then also Robinhood is often mentioned in the same sentence with crypto. And you can see that we experienced a nice base breakout here at the beginning of September into an uptrend and then an even stronger uptrend of late. And that is it for this week. If you haven't already, I urge you, use that button below. I have a free 2-week trial of my twice weekly MEM Edge report filled with stocks that are benefiting from this recent move into these certainly faster moving areas of the market, and even more importantly, keeping you on top of potential pullbacks. You'll want to be aware of when the markets do at least level off or potentially pull back. Have a great weekend. Hit that like button if you like what you've seen, and I'll look for you here again next Friday.